week right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. It's great to have you join us. Let's kick off the morning with the markets. Now we see oil prices rose daily 1% today, extending gains from the previous session as China eased some of its strict COVID-19 protocols, fueling hopes of a recovery in economic activity and demand of the world's top crude importer. Brent crude futures rose 87 cents to $96.86 per barrel in early trade after settling up 1.1% on Friday. U.S. WTI crude futures was at $89.76 a barrel, up by 80 cents after closing Friday's session 2.9% higher. That's a bigger mover. Commodities prices rallied after last week, Friday, after China's National Health Commission adjusted its COVID prevention and control measures. But COVID cases climbed in China over the weekend. So we're seeing all of that moving the oil market, and it'd be interesting to see how oil prices actually trend this week. Let's move on to other markets now. New York cocoa futures retreated from an earlier 6-month high on Friday, with the recent run-up seen unlikely to be sustained due to a generally favorable outlook for production in top grower Ivory Coast. March New York cocoa CC2 settled down $37 to $2,518 a ton after rising to a 6-month high peak of $2,577. Dealers noted the flow of cocoa from Ivory Coast has been disrupted by a dock workers' strike in San Pedro, one of the nation's 2 main ports, although the outlook for this year's crop remained favorable. To the coffee market now, ICE-certified Arabica stocks rose to 454,056 bags on November 11th, climbing further from a 23-year low of 382,695 bags set on November 3rd. The bags pending grading rose to 456,000 bags in Antwerp, which could increase overall stocks to more than 900,000 bags. We'll be drilling down on the commodities market to know the drivers. That's tomorrow. In other markets now, we see Chicago wheat, corn, and soybeans rose last week, underpinned by strong commodities and equities market, as well as hopes that China's easing of COVID-19 restrictions could boost demand. Soybeans bounced on hopes that China's move to ease some COVID-19 curves might spur economic activity, potentially boosting demand for goods, including soybeans. China shortened quarantine by 2 days for close contacts of infected people and for inbound travelers, and removed the penalty for airlines for bringing in too many cases. The loosening of curbs cheered markets, even as experts cautioned that reopening probably remained a long way off. And back here, rising inflation drove Nigeria's consumption expenditure to 57.08 trillion naira in the first half of 2022. And that's according to the Nigeria Gross Domestic Product Report. Expenditure and Income Approach report released by the National Bureau of Statistics. The latest figure from the NBS presents a 14.39% increase from the 49.8 trillion naira that was spent within the corresponding period of 2021. At the same time, the report shows that in real terms, household final consumption, which include spending incurred by resident households on individual consumption goods and services, grew by 6.94% and 17.64% year-on-year in the first quarter and second quarter of 2022 each. Meanwhile, the NBS report points out the household consumption accounted for 76.79% of real GDP at market prices in the first quarter of 2022, and 78.99% in Q2 2022, leaving little for investments and others. All right, after the break now, we'll be discussing accelerating investments in Nigeria's healthcare sector. That's our next conversation. Do stay with us. This is Business Morning. Now to our first conversation. Health is indeed wealth, as there's an impact of health outcomes on the socioeconomic development of any nation. And healthier populace will bring about a more productive workforce, among other benefits. But what can be done to foster innovative financing models, bridge healthcare financial gaps, and promote both short-term and long-term growth of the sector? Join us now is Damilola Aloba, consumer industry leader at EY West Africa, joining us right here in the studio. Great to have you. Good morning.
Thank you very much, Ladi. Good morning.
Good morning.
Good morning to all our viewers.
Right. And obviously, a healthy workforce is paramount, for any economy. How would you describe, healthcare investment in Nigeria, right now compared to, say, 10 years ago?
Okay, thank you. I think not much has changed. In the last 10 years, if you look at what the numbers, the statistics have shown, it shows that, the indices have gone even worse. And I'll give you an example. Population in 2011 was about 163 million in Nigeria. Today, in 2021, population has grown by about 50% to about 211 million. What that tells you is that the need for healthcare would increase significantly. However, what you'll also find is that the contribution on healthcare spend as percentage of GDP have not even changed at all. So because at the time, 2011, you find about 3.32%, as against 3.7 in 2021. And again, that's compared to the African Union benchmark of about 9.7%. You can see that that's very far away.
Right.
And then you look at the budgetary allocation by the government at the federal level, and you see that it ranges between 3.7 and 7.5%. But what the benchmark also is saying about 15% from an African Union perspective. So when you look at all of that, you realize that that has contributed to the worsening situations that you find today. You find serious brain drain. Just recently, the Nigerian Medical Association said, doctors to the ratio of doctors to patients, about 1 doctor to 10,000 patients.
That's a big,
which is
big number.
Which is a big number. So the indices, and then the spend itself. When government says they budgeted for the health sector, you find that the spend goes really on recurrent expenditure. More of it on payment of salaries, managing the ministries, running, training, and all of that. But what actually goes into CAPEX and development of the sector in terms of healthcare infrastructure and all of that is really minimal. So you can see that, again, you've seen, everyone knows about the brain drain that is going on. If the sector was to be in a good condition, you find that people will stay behind and work within the country.
And I've overheard, conversations. Last time I was at a diagnostics place, and the people there were talking about how, some of the best hands, have actually left the country at this time, and it looks like more, might. But it'd be great to change that narrative, at some point. But let's look at private sector participation now in the sector. How would you describe it?
Well, in terms of the actual total spend, private sector in the last couple of years have probably contributed 85% of the entire spend. And this is from the back of, one, out-of-pocket expenses, go to the hospital, bring your money, spend, and also health insurance. Health insurance penetration level, albeit very low, less than 5%. And that also has been the major contributors. It has also been private sector investments by certain sponsors, development finance institutions, private equity, and all of that. So that has been the major role that the private sector is playing. So you can imagine, without the private sector, you imagine where we all be in terms of our healthcare sector.
So what do you think needs to be done, to drive more, private sector participation at this time?
Well, I think the sector needs to be made attractive. One of that is for the regulators of the National Health Insurance Commission scheme to to ensure that penetration level increases considerably. For example, if we move from less than 5% to 20%, what that does is that if I build a hospital, I know that I'm going to get patients that can pay, that can afford to pay for the services. So what's the point of building a 5-star hospital that people come in and they can't afford your services? So if penetration level increases, what you find is that a lot more investment will come into the sector from a private sector standpoint. And also, you find that a lot of, you see, private sector plays a critical role. So the more private sector continues to do its role of, providing those quality services, then a lot more will happen from the government angle, policy-wise, and all of that.
All right. So obviously, inflation has been, the major, talking point, for 2022. Rising prices, food inflation and all of that. But, recently I walked into a pharmacy and I was trying to buy some multivitamins, and I found out that the prices have more than doubled, this year. And that's a problem. That's an affordability issue.
Yeah. Yeah, you're right. You see, in the pharmaceutical space, that's another, area that needs to be looked at critically. The reality is that when you look at total pharmaceutical sales in Nigeria today, estimated to be about $2.8 billion. But what's interesting about that is that 70% of that comprises imported drugs. So in as much as you're selling drugs every now and then, 30% is produced locally. And of those that are produced locally, the installed capacity is about 25. Capacity being utilized is actually 25% of that. Now, what that tells you is that when you buy drugs, import drugs, you rely on foreign exchange, dollars, to be able to acquire that. So the pass-through effect of continuing buying drugs, importing drugs, the pass-through effect is what you are seeing, in the rising prices, apart from the fact that there's rising inflation in Nigeria on its own, but the FX pass-through effects, and also the fact that there are critical logistic supply chain issues, which has been factored into prices.
All right. So how can we, achieve self-sufficiency, in pharmaceutical manufacturing? Because if we can achieve that, let's get more percentage of, medicines actually made here, in Nigeria.
Well, I think for that to happen, government needs to create an enabling environment. And what do I mean by that? At the policy level, government needs to ensure that, the policies are right for drugs to be produced locally. And I'll give you an instance. During the COVID period, everyone has been saying that, we rely on the global supply chain and all of that for pharmaceutical production. But what you will find is that when there was a lockdown, China and India, mainly China actually, happens to be the country that provides or supplies all the inputs for pharmaceutical production. So what does that really mean? It means that when there was a lockdown, Nigeria and other countries in Africa couldn't reach China to buy, their inputs. And if you are relying on imported drugs, what that means is that there's a challenge or the risk of drug security. So to that extent, what can we do? Government enabling environment. There needs to be support for those that are producing locally. For example, those that are doing contract manufacturing. Government should ensure that the support from a financing standpoint and the facility they have is adequate to be able to produce a lot more. And then in terms of FX support, it's difficult, but if they still, importing final formulations, they still need FX. So whatever support that can be granted to that to ensure that local production increases considerably, I think we'll be in a good place.
All right. Another big issue, medical tourism.
Oh, yeah, that's something that we all know. When you spend over $1 billion annually on medical tourism, I think it's clear from where we started from, You know, the infrastructure is not there, the enabling environment for doctors to operate, you know. And you find that most of those that travel abroad, many of them they are attended to by Nigerian doctors. So it means that the Nigerian doctors are only looking for that conducive environment, the conducive, the pay, competitive or attractive salaries, and all of that to compensate for the kind of effort and the experience they put in. So medical tourism can only be addressed when you address all the issues I've highlighted earlier: your insurance penetration, making the industry more attractive, ensuring that the spend the government has put into the sector increases to match global standards. I'll give you an example. Nigeria, as of today, we have about 20 million people. Healthcare spend in Nigeria is $84. Is it $4? Sorry, healthcare per capita.
Per capita.
Yeah, is $84. Now, if you look at a country like Brazil, who has about 215 million people, healthcare per capita is about $852. You know, dollars. Now, in South Africa, it's about 540. South Africa has about 61 million people. And then Egypt, 105 million and $148. You see that comparatively, those are similar our peers, you know, and we're not doing well at all. So we need to improve all those statistics.
All right, well, let's look at, you know, getting affordable health care in Nigeria. What's the way forward to actually make that a reality?
Well, the way forward is for there to be more focus on primary health care. And I'll tell you why. You know, the incidence of diseases, the main diseases that we see in Nigeria today, malaria, you know, neonatal diseases, lower respiratory diseases, and all of that, you know, they are found at that elementary level before they get to the, you know, tertiary level. So if there are more primary healthcare centers that have built, you know, at local government level, if local government can actually begin to roll out primary healthcare centers with support of states and all of that, it will help a lot. And then the basic healthcare provision fund, you know, which the fund has been going into that over the years, have declined in the last 3 years. So if government can continue, of course, it's because of dwindling revenue from the side of government.
Right.
But if that can also continue and be increased, it will also ensure that affordable healthcare is actually affordable.
Right.
So in terms of affordability, you also need to look at quality of care, you know, which is something that you should go alongside each other. And then the insurance penetration, which from a nationalistic standpoint, everyone at the federal, what is happening right now is the federal government is contributing, the enrollees are not contributing, right. You know, so if
so much
public sector and private sector do.
I guess we all have a part to play.
Absolutely.
So much to unpack in that industry. Thank you so much, Damilola Aloba, consumer industry leader, EY West Africa. It was great having your perspective on the show.
Thank you very much, Ladi, and nice to be here.
Thank you. All right, so that was the conversation now. So after the break, we'll be crossing over to the National Theatre for the UNWTO conference happening right here in Lagos, Nigeria. That's after the break. Just stay with us. This is Business Morning. Now, the United Nations World Tourism Organization conference being held in Nigeria. Now, the venue is the National Theatre, Igomo, Lagos here. The conference was being attended by 166 nations, focusing on cultural properties that help to accelerate economic development and job creation in the tourism sector. Let's cross over now live to the venue. We have Olumide Macaulay, Channel TV correspondent there, standing by to bring us up to speed. Hello, Olumide.
Hello, laddies. Good to be with you on Business Morning today.
Yeah, great to have you on this side, you know, for the first time in a while. Bring us up to speed on what's happening there.
Well, basically, we're at the National Theatre, Igomu, in Lagos, which is the venue for the United Nations World Tourism Organization Global Conference. That is to help to marry the industries of creative industry and tourism and culture. To that end, people have been brought in from all over the world and embassies to find a way to link these three ideas together so that income can be generated and growth can be fostered.
Right, quite interesting. and I hear the national anthem there in the background. What other conversations are being had at the moment?
Well, you're correct to say that the national anthem is going on, so I can't really make out what you're saying, but we are here, and at the end of the national anthem, which is being relayed at the moment, we will have to, the event proper will begin, and all the speakers will get onto the stage, and the event proper will be underway.
All right, Olumide, I guess we'll get more updates later on. I'm sure you can't really hear me now, but we'll get more updates as they commence today. Thank you so much. That was Olumide Macaulay there, right there at the venue at the National Theatre. All right, moving on to our next conversation. Earlier this month, we had the 2022 Nigerian Mining Week, where issues around Nigeria's mining sector were discussed. We also had the Women in Mining in Nigeria Conference. To discuss the prospects for the mining industry in Nigeria, we have engineer Janet Adeyemi, President, Women in Mining in Nigeria, joining us via Zoom. Great to have you on the program.
Thank you. Good morning. How are you?
I'm fine, thank you. Great to have you. So could you paint a picture of women participation in the mining industry, in Nigeria? When I hear mining, it sounds like a man's game.
Thank you, Ladi. That has always been the notion. Women in mining has always been in the mining sector. But the only thing is that just like any other sectors, they made them so opaque, not visible. Because even pre-colonial times, you have women, especially history documented it around Plateau states, that women were there working. But if you look at our statute books, women are banned from working when they were working under mines, even when they are still engaged or they are not officially recorded. And this has been documented by Aderi in his research work. But fast forward to present times, you find out that the number might not be much, but women are contributing in all aspects of mining, from exploration to processing and value addition.
Well, how would you describe inflow of investors into Nigeria's mining sector? In 2022, we've had a couple of headwinds, globally from the war in Ukraine. How is investment looking?
The investment is really coming up, but you know that quite a number of things prompt investment FDI direction. And one of such factors is having very robust data, having very good legal framework, regulatory framework to guide, and then your judicial system in case of arbitration and all that. So all these things play significant roles when you are talking about people coming into the country. But howbeit, there's no choice, because if you have to shift your energy, from what it is fossil fuel based to clean energy transition, you need some minerals. Unfortunately, Nigeria equally houses, or let me say, God blessed or endowed Nigeria with some of these mineral resources. So you find out that the speed with which we want them might not be more compared to what federal government is doing to get aggressive in participation, but they are coming in gradually. And the 2020 week witnessed such. For instance, I met a long friend of mine who used to be in World Bank and who came in search of these critical minerals. You understand? That's, maybe I shouldn't mention them, but quite a number of them are really coming. And when you look at the practice from time past to now, you could see that constantly, despite even the initial negative perception about the mining industry, which from Fayemi's time, aggressively did so much. If you look at what you call the roadmap, improved the index perception so much, perception of the mining sector. And then you find out that when you put our laws and you put everything we put into place, you compare it with other sectors, other countries, other mining jurisdictions, you find that Nigeria is not faring, is faring well compared to others. So what is really lacking is for us to have very good data. And thank God for the quantum of money that has been released. Federal government through its Natural Intervention Fund, the World Bank Mine Diver Loan, then the partnership with American-US Geological Agency, has boosted the quantum of data we have in the space to encourage investors, to look in that direction, because no investor wants to come into a country without having reasonable pointer to show that, oh, there are some reserve estimates, even if they have to do additional studies, because you can never have enough information. But the basic data they have right now is sufficient to encourage participation. Thank you.
And obviously, the mining sector is quite a big one with so many minerals. Are there any untapped opportunities, in that sector right now?
The opportunities are numerous because mining has a lot of cross-cutting issues. So when you talk of opportunities, you have opportunities to mine various kinds of minerals, from silver to gold to cobalt to nickel to feldspar to fluorite, and all these things have basic roles to play in various industries. Some in pharmaceutical industries, some in construction industries, such as paint, some in paper industry. So these are investment opportunities. And beyond that, you have health and safety issues. You have equipment financing, because you cannot mine without basic equipment. And these equipments are very capital intensive. So you need companies who can come in, set up leasing arrangements, set up manufacturing arrangements, to mine. You have logistics. You have to move either by bulk materials from one location to the other. So trucking companies, we equally have roles to play in this sector. You are looking at health and safety issues. Health and safety issues is very, very important, especially in the mining community, because you don't want to mine and then leave the environment degraded. You don't want to mine and destroy the lives of people there, because some materials can be very carcinogenic, in the course of mining, or even create lungs and heart problems. So health and safety consultants will try. You look at procurement of various kinds of materials, from plastic materials to chemical equipment that will be needed, because you find out that in some technologies now, you only have to do a kind of hot water injection procedure to bring out lithium. You don't have to really devastate and open up the places. So these are technologies that are needed. You equally need what you call technology, development of softwares. Here, our children especially understand, the people I call the Gen Z generation have so much to do in this area. Development of softwares, flooding the places, you understand, with all these things. Then even providing food, services, uniforms, think of anything, you understand, you find out that the mining industry houses them. Are you thinking of even helicopters, engaging helicopters to go to very remote areas? Look at Mambila area. Mambila is one of the blessed spots in this country, that is Taraba State, with beautiful gemstones and things like that. The time to cross over, you find out that if you have chopper services all over the place, the chopper will thrive. So as mining improves, you find out that all these services will come to play. Thank you.
I guess it's a massive value chain we have in that sector. But let's the narrative, has been Nigeria as a country, we just export, raw materials most of the time. We see the story in the oil with our oil output there, not getting the amount of output we're supposed to get out. How do we also, change the narrative there with mining, where we're actually exporting, finished products and not just, raw materials, from the mining sector?
For any country to actually develop, your natural resources must be processed within the country. The moment you keep on exporting your natural resources in the raw form, you're at a loss for it, because anything you add value automatically jumps up the cost. It's just like somebody who grew the yam and somebody who processed it into yam powder. So it is always advisable we add value. And how do we do this? You can only do this when you are energy sufficient. Where do we have the energy? We don't have the energy. Foundries, for instance, I don't think we have any functional foundry in this country. You can't do much in the mining sector, especially dealing with metals without foundry. You need refinery to refine your gold. The energy consumption requirement is enormous. So these are some of the reasons, and I think we should equally use this medium to call on governments to pay attention to that. Then you find out that most of our sons, now is the time to start encouraging or even looking at our curriculum, to change to change some of our subjects to reflect the realities of the day. Things have changed from the era of A for apple, B for ball. We should start looking for some other means, understand, of engaging these students at very early age. No wonder we started what we call the Girls for Mining Club. You know, right now in Taraba, it's been launched today. On the 10th, it was launched in Plateau State. The intention is to increase the number of people going, who will probably look in the direction of the extractive sector to be able to utilize the sector for developmental purposes. And like create lapidary centers, for instance, where you teach people how to cut and polish stones. All the stones we use and wear, like I'm putting on an emerald now. And these are very expensive things. They look simple but expensive, especially when you cut into shape. Last week we had what we call the Gold and Gem Conference in Lagos. Is to showcase and ensure you bring like a B2B meeting where you bring producers, people who are exploiting, people who are cutting, people who are adding values. You know, you add value to your gold, you smelt it, add value, make jewelry out of it, beautiful jewelry. Women always like to adorn themselves with jewelry. That's one source of doing something. Like our fluoride, we should ensure we extract them, use them in toothpaste, in paint industry, and several other things. Use them even as insulators, our sands and things. So we used to have a glass company in Ondo State. The whole thing died off. You know, these are industries we should now set up all over, you know, private sector driven, maybe with less participation of government, beyond maybe regulatory or something. That will be able to advance. And the trending thing is the critical minerals. And what is critical minerals? Critical minerals are minerals that are extremely very sensitive for the development of any country, you understand? And such minerals are not what you should just open to all. We saw what Canada did recently. Canada ensured that is restricting the mining of the critical minerals, because these are things you will use in batteries, or in production of batteries, in defense materials and all that. So if you allow exploitation of these things completely without adding value, you are at a loss for it, because it's brought back to your country and it's sold to you. So what value is it to you when, and unfortunately, they are finite materials. Once they are gone, they are gone. You can't replenish them, because what you are tapping today, geology told us that some of them Precambrian age millions and trillions of years ago. So how do you replenish? So it's not a time to just joke. We cannot even afford to make the mistakes we made in the oil and gas sector and try and repeat the same mistakes in the solid mineral sector. That will only show that we are foolish as a nation. Thank you.
All right, I guess it's time to change the narrative, you know, in that sector. I want to thank you so much, Engineer Janet Adeyemi, President, Women in Mining in Nigeria. It was great having your perspective on the show today. Thank you so much.
Thank you, Ladi. I'm grateful. Bye-bye.
All right, now let's see what's happening in the market. It's time to dive over there. It's a new week, a brand new week, a lot of expectations, you know, this market. And we have Aniete right here to bring us up to speed. Aniete, happy new week.
Happy new week, like the second week of November.
Right.
Can you believe it?
I can, actually.
All right.
Well, it's moving so fast.
Yeah, well, the month is moving so fast. And of course, people are also will be taking stock. It's the second half of the year. So, of course, we will be looking at the second half performance of equities, but that's going to come maybe towards the first week of January. But it's not too late to take stock.
And we see a lot of action in that
yes, at the Forex market, which
right.
I will be giving you more information on that. And with that being said, for the Forex market, this is how it turned out. 66.46% week-on-week positive change. That's what it closed the week as at November the 11th. So $787.98 million. That's the total amount that was transacted at the FMDQ exchange last week. And of course, when you take a look at the board, it's all positive sentiments there, plus 69.29% for the FX spot market. And as well as the force market, it was wow by a whopping more than 942% there at this amount here, $4.9 million. Now, when you look at the Nigeria Autonomous market where the Naira was traded, it was down in contrast to what you had last week. In the previous week, it was down by 0.17%. Now the Naira, as at the close of trading on Friday, this is what it turned out: 443 Naira 87 kobo against what it had in the previous week, 443 Naira 13 kobo. As well as the investors and exporters window, this is what you had there: 69.29% increase for that market. So we will be talking to our forex and fixed income market trader, Senator Audu, to give us more insight into that market and what to expect for this week. Now, speaking of the money market, at the money market, the overnight rate had expanded by 400 basis points to 12.8% last week. And of course, we had a Treasury bills auction last week. Now, our Senator is live here with us via Zoom, so let him tell us more about the market, the fixed income market, the Treasury bills, the bonds market, as well as the money market. Thank you for joining us, Senator.
Thank you for having me. Good morning. Sadiq Safri, by the way. So, Sadiq Safri, an investment research analyst from Maristem, Nigeria. Okay.
Oh, all right, Sadiq. Now, Sadiq, I want to ask you, now, the Treasury bills market, as well as the bonds market, they were buoyant last week. If you take a look at your trading activity for last week. Now, I saw that participants took position at the short and mid spectrums of the curve, that's at the Treasury bills market. Then what to expect? There will be an FGN bond auction this week, as well as the primary market auction, market auction on Wednesday. Now, give us an overview of the market and what to expect this week.
Okay, thank you very much for having me once again. And as you rightly mentioned, the market was likely buoyant last week on the NT-bills primary market auction that we saw last week. That was last week Wednesday. We saw increased subscription and allotments, despite the offer coming lower than the offer that was made in the previous auction. And this was largely due to the liquidity that was in the system. So there was more liquidity in the system, and the bank needed to, put their money in a place, and the Treasury bill primary market auction came just at the right time for them. So, we saw increased subscription, we saw increased allotment, and that was, it fed into the stop rates on 91 and 182 did remain flat at 6.5% and 8.05% respectively. However, the stop rates for the 364-day declined to 13.99% from 14.5%. And the secondary market auction, the secondary market also mirrored these the activities in the primary market auction. We saw buying interest, as you mentioned earlier, on the short and medium term curve, the short and medium instruments, and that allowed the market to be bullish. Last week we saw rates on both Treasury bills and bond increase. The bond increased to 14%, and also the T-bills also increased to 12.6%. So yeah, largely, investor, it was the liquidity that prompted this buying interest. On the bond auction this week, that's today, to be specific, we expect that the rates would also increase, but marginally this time around. We still expect that there would be that interest, and as we've seen since the rate hike in May and even in September, investors are now they are seeking more incentives, to compensate for the macroeconomic uncertainties that we are facing here in Nigeria. And we've seen inflation hit 20.77%, the highest since September 2005. Investors are aware of these conditions. They are aware of the uncertainty, the growing and heightened uncertainty in the macroeconomic environment here in Nigeria. And yet, they are also asking for more compensation and we expect the rates at the bond auction to increase, but marginally.
Okay, now the National Bureau of Statistics is expected to release the October inflation report, and going by economic analysts, they expect that to increase. And then on Wednesday, we will be having an OMO market auction as well as the Forex market auction. And then possible CRL debits, which is expected to pressure the system. So how do you see this coming into play for the markets?
Okay, so yeah, the market generally, as I mentioned earlier, the investors are aware of these uncertainties in the macroeconomic environment. So inflation coming out today is also expected to trend upward, considering the persistent challenges, structural challenges that we are facing here in Nigeria, and they are still existing. It's not like it has disappeared all of a sudden. So inflation is still expected to trend upward, and this is expected to feed into the decisions of investors. So in the markets, on the long run, we will still be seeing increased rates. That's on the primary market. We'll be seeing increased rates, and also on the secondary market, yields are expected to trend upward going forward.
Okay, thank you, Sadiq. Also, Sadiq at Meristem Securities Limited. So, yeah, Ladi, time is never your friend, especially when you want to have some fun with the numbers.
Yeah, for fun with a market that's in a downtrend. Well,
exactly, for the equities market. But at least before I go, just on this few seconds, the market, we will be expecting bearish sentiments to continue at the equities market. That's the outlook.
That's the outlook. All right, we'll keep watching. Thank you so much, Aniete. That was Aniete there giving us the lowdown from the markets. All right, after the break, we'll head on to London. That's in a moment. Just stay with us. This is Business Morning. Welcome back. Let's head on to the UK now. We have Juliana standing by right there. Good morning, Juliana, and Happy New Week. Well, I got information that the parent firm of a fashion retailer, that's Jules, and the garden trading company is on the brink of collapse. That's more risk for jobs at this time.
Good morning, Laddie. It is more risk, but if you permit me, I would like to start with some breaking news, actually, which is a developing news story that is likely to have a significant impact in geopolitics, and that is that the Russian Foreign Minister, Sergei Lavrov, has been taken to hospital after suffering a health problem following his arrival for the G20 summit in Bali. This is according to all of the wires, and it has been confirmed by Indonesian health authorities. Sergei Lavrov is the Russian foreign minister. He has been by President Vladimir Putin's side for the past 19 years. There is a G20 summit taking place on the island nation of Bali. Today, Rishi Sunak is there. Later today, there was going to be this historic meet of the world's two most important leaders, Xi Jinping and President Biden. This was the first time they were going to meet in person since Biden became president. And now Russia still is a member of the industrialized nations, so the richest 20 nations in the world. Of course, Putin wasn't being there. He said he wasn't going to be there because, of course, he's pretty busy in the Kremlin at the moment. Sergei Lavrov was there for him. There were pictures showing him departing the Russian aircraft earlier this morning, and now we're hearing perhaps he has suffered from a heart condition, which is incredibly serious. Lots of media buffs now just commentating on the fact that he could potentially have been taken for the worst. Now, Russian Foreign Ministry have said that this is fake news, but it has been confirmed by Indonesian authorities who are treating Sergei Lavrov that he is indeed suffering from a significant heart condition. I'm sure, of course, throughout the day we'll be updating our viewers on that, but this is a very serious developing story.
Yeah, quite a serious story there. Well, we will be tracking to see how it all plays out. But that is a big breaking story we just got there. But what else are we expecting, for the week? Any market moving, data?
Well, certainly this G20 summit is the topic of the week. As I said, Joe Biden will be meeting Xi Jinping for the first time, who's been pretty much closed up under wraps under COVID measures in Beijing. They'll be meeting today. Xi Jinping has arrived. Rishi Sunak, of course, is there. What these leaders were supposed to do is put Sergei Lavrov in a corner and tackle him. That doesn't look like it's going to happen. So certainly all of the news agenda this week will be based on Sergei Lavrov's condition and whether or not he is incapacitated. That's a huge story. More domestically, Suella Braverman, the UK Home Secretary, is in Paris. She's been there for the weekend. She has, alongside her French counterpart, renewed this illegal migrant crisis issue. It was £53 million per year that the British government were paying France to stop illegal trafficking on the border in Calais. It hasn't worked, of course, because we've had over 40,000 people come here this year already via dinghies on the channel. That's been increased to, I believe, £65 million. She's giving a news conference now. And then, of course, the big one on Thursday, which is the autumn statement delivered by Jeremy Hunt. We've already heard really mostly what's going to be in that statement, which it does include tax rises and cuts to public services. But we'll just have to wait and see, Laddie. But yes, the Sergei Lavrov story,
right.
A huge developing, breaking story.
Big one. We'll get updates for that later on. Thank you so much, Juliana.
Thank you.
That was Juliana there giving us the details from the UK and that breaking news coming from the G20. Well, now let's move on to other markets now. We see, I see the price of Bitcoin there still way down today with all that's happening in the crypto industry there with the FTX Binance issue there. Still weighing on the market. We see Bitcoin losing that 18,000 level. If we flip over to the Fair Greed Index, we see it's about 22 points deeper into extreme fear, showing that the market is still fearful, heavily fearful at this time. See the market cap there still at 803.01 billion. That's down 5.31%. Talking about the market cap in the crypto space, we're still seeing the market subdued. You know, at this time, we have Gilbert Jopata now, financial market analyst. Hello, Gilbert.
Yes. Good morning, Mr. Laddie.
Good morning, Gilbert. Well, fresh week, and it looks like what happened, you know, last week is still, you know, impacting the market, but it looks like the CPI data from the U.S. is not playing much into the crypto space at this time.
Okay, you know, during Powell's last speech, he hinted towards a less aggressive rate hike in the coming numbers or next after the manufacturing and service index had shown that the aggressive tightening was already having an impact on the economy. So with this kind of low numbers, because this numbers is actually low than what we've always had, the CPI numbers, bearing in mind that the CPI data always validates the Fed's next course of action, I am actually looking at three things which we should rather be paying attention to and how the market is going to react to this. One is a pivot from the Fed. Market technicals as well, and then more for the correlation process. But if we are looking at the Fed pivoting, you know, we are going to likely see a change of direction from the Fed into a less aggressive rate hike, which we should be looking at maybe 50 basis points, 25 basis points. But we won't see the kind of quantitative easing we've always seen in the past years. But then the market technical response, which is the response we're actually expecting with the CPI data. Recent rate hike have always had less impact on the market. What we've always seen is just maybe a $500 market move. They are below V-shaped bottom or even an obvious market bounce. Okay. But haven't broken this important critical support of 18K, a less aggressive hike may drive in more buyers into the market.
Right.
While while looking more of a decorrelation process, which I think is already happening, because 2 weeks ago, Amazon was down by 15%, Meta 20%, while Bitcoin remained in a sideways movement. Today, Amazon is headed into a resistance, while Bitcoin is in a local support. So these are signs more of Bitcoin becoming less correlated to the stock market.
Yeah,
and
big
if
signs.
You look at things,
Gilbert. We're seeing that that correlation breaking, between the market. But I'm so sorry, Gilbert. We've run out of time now. We'll get more analysis later on the week. Thank you so much, Gilbert Rupata, financial market analyst. Thank you.
All right. Thank you, Mr. Ladi.
All right. So quickly now, we see the price of Bitcoin at $16,228. That's down 3.38% this morning. $33.15 billion. Lower volume than we see from the previous sessions, same time this morning, showing that the sell pressures is gradually coming down. But $1,204 for price of Ethereum, down 4.07%. Well, that's it for the markets, and that's it on the show today. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, check out videos, and you can watch all our production. Thank you for watching. I'm Ladi Williams. Bye for now.